All right, good morning. September 9th, 992025. I'm Zach Howard, morning market update. We're getting pretty advanced in the acceleration of these fiat debasement around the globe. Seen another prime minister resign yesterday in France, joining Japan's last week. Argentina politics falling apart. The fiat system is taking its toll on all these empty suits around the globe, and it's going to accelerate from here, if you ask me. And we're going to look at a few things. Most of all, my favorite topic, gold, AI. Let's look at that. Let's start off with AI. Talked about this company last December. Did a write up on it, research report before any sell side analysts were even looking at it on Wall Street. Nabibius, how you say it? NBIS. Big announcement overnight here, doing data centers with Microsoft. Boom, it's up 50% here on the open, 45%, something like that. But it's still only a small company, $15 billion, I think, in market cap before this announcement. Small time. Like, the market is still trying to price in some of these new technology companies and what it means for the new economy that's coming forward. On to my favorite subject, gold. Look at this. This is a chart of gold priced in CAD. Fiat money is failing faster in some countries more than others. All-time highs in all currencies. All-time high in US dollar, but way more faster, higher in currencies that are failing faster, mostly with socialist governments who have no governor to their spending and it's just out of control. Well, gold is your governor. This is a chart over the last 1 year. If you just own gold, if you're Canadian, let the government keep spending, let them debase the currency as fast as you can. That is your relief valve. Hard out in hard assets, particularly gold, which is 5,000-year-old money, and truth serum to politicians and all the F and BS. No matter what your political party is, it doesn't matter. All the party of fiat. This is a long-term chart of gold. The same pattern, but look, since 2020, we've crossed the Rubicon, never going back, guys. Fiscal spending is here, and they're just going to spend out of fake fiat. That's what we're going to see. Gold price, I can't believe we're at 5,000 CAD at this quick a time period. I thought there'd be more stress in everyday lives. You'd be seeing it when gold hit 5,000 an ounce Canadian, but it has a lot more to go. On the gold miners, the GDX ETF, master strength signal here in a bullish trend, higher lows, higher highs, but it kind of cautious when I seen this yesterday. One of the fake Goldman Sachs consensus narratives most times when there's sell-side research saying they're now recommending gold mining stocks. Oh, could be temporary top in some of the names. Over here on the right, highly recommend you subscribe to Kevin Muir's, the Macro Tourist Substack. He does great work. He did a great post Sunday on the rebalancing in the GDX, the biggest gold mining ETF. And this is going to be a rebalancing here next week. Some names are coming out, some names are coming in. What that means is going to be forced buying before selling some of the names. But some of these ones down here are pretty attractive on the Canadian side. I used to cover Wesdome Gold. They're getting added in a big way. Kinross, covered them back a few years ago. They got some really great projects and an awesome balance sheet. Both those stocks have just been ripping. So if you're just in gold miners, check out some of the names here in the rebalancing. My favorite one on the list, but a more potential addition to the GDXG, the junior space, Mako mining, probably not this quarter, but in the quarters to come as it continues to grow. One day is going to be in the GDX, I think. On to the theme, debasement. All around the world, U.S. particularly, I talked about how the U.S. is enacting yield curve control strategically through the bond market of issuing treasuries through that short duration T-bill sector. Last week, they had the biggest auction ever, $100 billion in short-term money. And they put it on that 4-week T-bill rate as opposed to that long duration. They're using that short-term money to then go and buy down the long-term bonds that are out there, helping to cap interest rates. As we see here, long-term chart of the 30-year yield, higher the yield, lower the value of that bond. It starts to get above 5, getting out of control. A lot of people say in the U.S. they're in real trouble. Well, what do? They go and they issue debt at the shorter end of the bond market, which is much lower interest rate, 3.5 thereabouts in those T-bill rates. The problem is they got to keep refinancing. It's only for 4 weeks. It's only a short-term place to park cash. If you're a sovereign nation, if you're doing business with a U.S. entity, you want to have cash, you're buying a T-bill. It's not a long-term solution. So this is strategic yield curve control. They've already enacted it. They're doing it. They're just not saying it out loud. This is what Japan did for years. Like I say, the debt, the deficits, the fiscal spending, there's no going back. We crossed the Rubicon in 2020. Some are more further along in this whole game. The socialist countries being those ones are further along with it, Canada and France, EU. It's going to get way more interesting from here, especially when you're looking at currencies measured in gold, measured in Bitcoin in some of these socialist countries. That's what I think. And how can you be bearish in this backdrop? They're telling you, and they're actually doing debasement of the currency faster and faster. Stocks are going to go up because you're going to have earnings that are measured in a fiat that is losing its value. Nominal growth will continue to accelerate. Nominal growth is not the same as real growth. If you're measuring growth in gold ounces, we're not getting it. If you're measuring growth in earnings per share at fiat, we're going to get it, especially through those tech companies. Global earnings revisions to go higher based on that backdrop. To me, interest rates falling, debasement of currencies, growth and inflation accelerate, all catalysts for continued growth. Doesn't matter about valuation. Back to Goldman Sachs again, consensus fade their estimates way too low. 1.8 to end off this year, 1.6 with the Fed about to get kicked out, and the Trump's just going to keep saying who he wants to do to job, a lower interest rate and devalue the currency. How can you be bearish? You need to be more bullish in that backdrop, particularly bullish hard assets. That's my take. Get that book, man. When money dies. Weimar Republic, history lessons from the past. It's playing out similar around the world. Have a good one. We will see you again soon. Be nice to people out there, man. There's a lot of people are going to feel hard going forward. I can see it. It's just people really wound up. Be nice to people that are close to you in your life. Have a good one.